Good morning, traders. Welcome to the TMT special edition video on the banks. We're going to give you a quick update. This will be a quick video, but we have some markets moving right now, and Fed spoke. Nothing came good out of the Fed yesterday other than more gloom, saying that they're concerned and there's a lot of uncertainty out there in the worldwide economy. Well, guess what? The markets do not like uncertainty. So I want to give you a fresh update. And the first thing I want to show you is the number one thing is bonds. Bonds right here. This line represents 20-year uptrend of resistance. 20 years. It's sitting right on the cusp of breaking out. Now, why is that important? Well, because if the case is these bonds start to break out, money's going to flow out of equities and go into bonds, gold, which is happening right now. So there's something big brewing, guys, and you really need to pay attention to this. Now, we're only talking about the banks right now. I put out a big video, a free video this morning, so I want you to keep an eye on, take a look out for that as well. So 20-year uptrend line of resistance, and right now it's sitting on a cusp of breaking out. This is a weekly chart, okay? And look at this, plenty of room really to run before it gets extremely overbought. The slow stochastics at 14.3 is already at the overbought state, but RSI a lot more room to go, and there's a lot of energy here because we already pulled back. So if this gets taken out, money will flow into bonds, and what's going to happen to the yields? Yields are going to dive even further. Here is the 10-year, right now trading at 160. That is the low, and it looks like it's going to go further. The German bond yields yesterday went negative for the first time in its history. Okay, negative yields are coming. Japan has one now. They're in a negative yield, and this is not a good sign. Okay, what's happening with the banks? The banks will deteriorate and will continually start to sell off on the banks. Banks right now have been the worst sector, one of the worst sectors of 2016. This is just going to add fuel to the fire. And another case is, you know, you have the Dodd-Frank Act that now they pulled away trading from these banks, and all they could do is aggressively lend. Well, they're not making any money at the yield negative interest rates. Take a look at this. I've shown this to you before. I wanted just to show you guys. Here's an overlay of the S&P and the yield. Where's the disconnect? Huge disconnect here. It's going to play catch up. You can see here how we were 1-for-1 basically, and we sold off, and then now the equities in February actually ran up higher, and look what happened to the yields. Lower lows and lower highs at 160. You see the XLF starting to break down a little bit, and of course Citibank just as a benchmark, just showing you that it's starting to roll over. This will play catch up. This will definitely hurt equity markets if the yields continue to get blown out to the downside. Okay, take a look at the McClellan Oscillator. I just want to show you that this is a good gauge of overbought, oversold in the equity markets. Right now we're only at negative 41, which tells me there's plenty of room to run to the downside. Plenty of room to run before we become oversold, grossly oversold. 80, 90, 100 is the extreme. And again, I put this out in a free video, so check that out as well. Here is the bullish percent financial index. This went on a sell signal. Okay, this is now on a sell signal. My trading model has put a sell signal out on equities, crude oil, and the banks. Part of equities is the banks, obviously, but this is one of the few that now is also on a sell signal. Okay, so if you trade in the banks, I'd be looking for any type of rally to get short. I wouldn't get short in the hole here. Here's the BKX, and let me see if I can increase this just a little bit here. Okay, you could see that it rallied and then sold off again. So anywhere in here, this is a February uptrend, and it never breached the uptrend channel, as you can see, since February, and it did it just a couple of days ago. So any bounce in the BKX or any of the banks for that matter would be enticing to look to short. Here's JP Morgan. Now this is the strongest of the large banks, so I would I like to short weakness, so I would sell the weak stocks and buy the strong stocks, but eventually JP Morgan will be susceptible to downside pressure as well, soon as all of the banks start to sell off. All right, so there's JP Morgan again. Let me get rid of that. Here's Wells Fargo. Here's the best. He's one of the best big banks to sell. You see how weak this is being getting? Now we're a little bit oversold here. Okay, the RSI 30. So I wouldn't short Wells Fargo at the moment, but onto any bounce, I would look to short Wells Fargo. I like that as one of the better banks. All right, guys, that's pretty much it. I just wanted to get a quick video out. Have a great day. Use your stops here, and we'll keep you posted.